Oh boy, it's been a while since we did one of these. This is an AMC price prediction video by the end of this week. And really, there's a lot we have to talk about in regards to where AMC could go, because we do have some economic data. We got the midterm elections starting to come out. And we also have the bond market, which starts to trade again on Monday, guys. So there's a lot of different dynamics here. But what I'm seeing from AMC is simply the rally has only just begun, and there is even a lot of options that are very close to the money. A lot of volume on these options on Thursday and Friday that is likely to continue this week as well. If you guys have not seen the video that I just put out, the last video before this one about a gamma squeeze, that's a key one to watch as well. But nonetheless, guys, that's a brief rundown of what we're going to talk about in this video. Let's get straight into it. So first things first, I do want to talk about the midterms, blah, 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 all the stuff that is going to be happening in the markets this week. But on a positive note for AMC, Black Panther Wakanda Forever eyes $180 million opening weekend, highest November debut ever. And the second highest at this point is Hunger Games: Catching Fire, which tallied $158 million during its debut in 2013, which was the highest November opening of all time. And I think the biggest thing this goes to show, number one, proving the short thesis is not true, that people are still going to go out to watch movies when there are quality movies in theaters to watch. And that is definitely to AMC's benefit, even as a lot of movie operators, even Cineworld, right? They're going bankrupt. They weren't in the same position as AMC was to survive COVID, and that is basically turning AMC into a monopoly if you do have another chain go down, which, I'm not going to forecast that, but from this point, it's looking like pretty good odds if they can also not get back to probability. AMC just has a lot of cash and can weather any storm. But nonetheless, this is showing that people are going out to movie theaters. And a lot of people will say, box office is never going to get back to 2010, 2013 levels. But you're having Black Panther beat out the November box office, the biggest debut ever. So I think that is going to cause instinctively, some bullish action in AMC's price. And I think this is going to be a tailwind, meaning it's going to be a positive thing for the stock over the next couple of weeks. So I do expect some good things from that. But you do have the bonds that start to trade tomorrow, which is interesting because what we've seen and what actually fueled a lot of this rally is bond yields going down. So the last time the bond market traded was on Thursday, and the bond yields on the 10-year treasury dropped 33 basis points. Now, if you look at 2022 in a whole, this was January 3rd, 2022. Bond yields were at 1.6%. They went all the way up to, almost 4.5%. Now they're down to 3.81%. Now, just depending how much tightening the markets I think the Fed is going to do from here, that's what is going to determine the 10-year bond yields. If the markets are going to say, hey guys, the Fed's not going to raise rates as aggressively and they're probably going to cut rates sooner than expected, which I think is the overall consensus, the bond yields could continue to come down. But as soon as we get news or data that is showing a contrary picture to that the Fed will keep raising rates, that inflation is still a very big problem, well, that's not going to be good. So what you really want to watch for tomorrow is going to be the bond yields. And something that is not such a positive thing, at least in the market's point of view, is that the Democrats will keep control of the Senate, NBC News projects. Now, obviously, it doesn't look like this is confirmed as of right now, but NBC News is projecting it. I'm sure it's probably going to happen. If you guys have seen what has happened over the weekend, Democrats got a couple more seats to the Senate, which is not a good thing because Democrats spend too much money. Let's not get political here. This is what the markets are thinking. Democrats spend too much money and inflation is going to last longer if they have a majority in the Senate and the presidency. So not really what the markets wanted to hear. That could play into bond yields because it will play into expectations for inflation. So I'm going to watch for that. Futures markets are not open as of right now, but if we are down or just not that green for the futures and for the start of tomorrow, I do think it's probably because the Democrats are expected to keep the Senate. As far as the short interest in AMC and the Ortex data, we're looking at a 20.5% short interest, 106 million shares that are sold short, with a days to cover around 6 now. So the volume has been pretty low, and it would be hard for shorts to get out of their short positions if they were forced to cover. Now, we'll talk about the FTX situation, what's going on in crypto, how that is also going to affect the markets in a video later on, so stay tuned for that. Could directly impact AMC and what's going to happen with that, but I don't really think we're at a moment where hedge funds are going to cover. I think we need to see more explosive volume, more of a gamma squeeze, more of the smaller shorts starting to cover, which we might start to see this week if we can move up another 20, 30, 40%. And we'll talk about the levels that I am watching for and my price expectations for AMC, because we're also at a very important technical level. But nonetheless, the last thing we knew is that the cost to borrow average was around 95%. The cost to borrow max was at about 345%, and the cost to borrow minimum in between 15 and 45%. I want to see coming tomorrow morning right off the bat, as soon as this data updates, what these cost to borrow rates are, because they remain the same on Friday. And you can actually see that there was some borrowing of stock in AMC, and the cost to borrow was around 44.5%. So when you're actually getting these numbers coming through at 44.5%, it's typically due to a very high short interest. Like, for an example, Beyond Meat has a 45% short interest and they're getting a 45% cost to borrow. That makes more sense to me. So either the short interest is probably a lot higher than what we're seeing at 20.5%, or potentially the cost to borrow is just very high because the volatility is also so high and the markets are expecting a big move in the upside direction. Now, as far as the actual technicals, price action of AMC, we're at the 50-day moving average. We are at the first major level of this whole entire rally. And from here, as long as we don't get rejected early in the morning and we can break out above that, typically AMC tends to move almost straight up to the next moving average once that happens. Take a look back here in June, before we got the parabolic rally in August. We were flirting with the 50-day moving average, finding resistance at this level for 1, 2, 3, 4, 5, 6, 7, 8 trading days, and then we blew past that with a gap up, and then within the next 1, 2, 3, 4 days we were at the 100-day moving average. So if that happens again this week, it's logical to expect the stock could move to that 100-day moving average, which is this orange line, and that is at $8.74 per share. So if I would put my price prediction anywhere on this chart based off of historical patterns that have happened in AMC stock in the past, I would think the stock is going to move up at least 21.5% and go to the 100-day moving average, if not as high as the 200-day moving average, and that's a 30% rally. Obviously, we could do that in a day, we could do that in 2 days, or it could be this whole entire week. But I don't want to get too unrealistic here. I want to kind of keep expectations a little bit dialed back this time around. I'm a lot more bullish than I'm going to let off to you guys. But I'm not going to say the stock's going to go to $25 this week. I think you got to break out of these key moving averages first, and it can be very explosive, like we've seen back here in August, right? The stock went up 19% in a day. It was obviously a higher price at this point, but the move that day was a $2 move. So if you get a $2 move here today, that's going to be a 30+% gain. And from there, we just continue to rally back in August. So it's really a toss-up. Obviously, I think a lot of it will depend on how we react to the 50-day moving average coming tomorrow morning, because we close right on it. Like right on it, guys. So that's going to be a main thing that I am actually watching for. It does look like that we have broken out into an uptrend as of right now, and that will be confirmed with that 50-day moving average. So I personally do think a 30% move is pretty much a given at this point, and I think it's a given because we have a lot of option activity and a lot of volume still on these options, and you still have a lot of options that are out of the money and pretty close to the money, relatively speaking. If we do get a 30% move, let's go ahead and pull up the options, and you do get to that $9 price, you're going to watch 8,600 options go into the money at the 750 strike, 21,000 options go into the money at the $8 strike, 6,000 at the 850, 7,500 at the $9 strike, and if you can get to the $10 strike, that's going to be the biggest thing. That would be, obviously, like I said, breaking out above the 50, 100, and 200-day moving averages. If you get to $10, that's another 15,000 for open interest that would go into the money, and the break evens on these are very, very low. Like the $10 strike, a break even of $10.12, because these options only cost 12 cents or $12. You know, you could see a lot of FOMO actually kick in, and a lot of that daily option hedging happening by market makers. So I think bare minimum, you're looking at a move to the 200-day moving average. A best case scenario, you could go as high as $15 per share for this week, because you do have a lot of option activity at the $25 strike, or the $15 strike as well. 25,000 for open interest, and the volume on these strikes was insane on Friday. 10,000 for volume at the $6 strike, 18,000 for volume at the $6.50. 33,000 for volume at the $7 strike, 19,000 at the $7.50, 13,500 at the $8, 7,000 at the $8.50, 5,000, 6,000, 12,000. You guys get the idea here. There's been a lot of volume over the last week, even trading these options. So I think you're going to continue to see a lot of people trading AMC options, guys. So that is going to be all for this video. Hit that like button, baby. Subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.